webinar to focus on optimizing your cash flow for your business. We will start in a little bit. We're just going to take a moment in order to allow more people to join in and get everyone situated. All right, everyone. This will be a 1-hour event where we will discuss a lot of information today regarding cash flow management. For the sake of time, we're going to go ahead and get started. My name is David Machaca Garcia, and I'm a business assistant specialist with the Governor's Small Business Assistance Team. The Governor's Office of Small Business Assistance Team and the Business Permit Office assist small and medium Texas businesses through advocacy, entrepreneurial support, education, and technical assistance. We hope that today you will take away information that could provide opportunities for the small business owners that are looking to grow their businesses or keep them financially healthy. We will be asking our panelists some frequently asked questions, but we understand that our audience may have some questions. If you have any questions regarding cash flow management, please send them to our small business email seen in the screen right here. We will be monitoring the inbox for questions, and we may be able to address them today. However, we may not be able to address your question today. Nonetheless, the Governor's Small Business Assistance Team will make sure to connect with you in a timely manner. We will also show the panelists' contact information at the end of this event. I would like to take some time to welcome the Director of Business and Community Development, my director, Mr. Larry McManus. Mr. McManus would like to provide some opening remarks for today's events. Thank you for being here this afternoon, Larry.
Thank you, David, and good afternoon, everyone. Thank you for joining us today. As David said, my name is Larry McManus, and I am the Director of Business and Community Development here in the Texas Economic and Tourism Office within the Office of the Governor. On behalf of Governor Abbott and our office, I want to thank you for taking the time out of your day to join us for today's Governor's Small Business Webinar Series. Today's topic, Optimizing Your Cash Flow, will offer insight from industry experts on how to optimize your business's cash flow, in addition to providing tips to keep your business financially healthy. There will be discussion on why it's important to understand your cash budget, to make strategic decisions that ultimately improve your operations. There are many key strategies in this area, like, are you actively managing your accounts receivable? Do you collect on accounts receivable quickly? Do you send your invoices promptly? Do you offer early payment discounts? Do you monitor your customers' credit worthiness? Do you streamline your inventory management? Also negotiate favorable terms or automate your financial processes. Here in our office, we're committed to working with Texas business owners like yourself to ensure that Texas continues to be the top state to start and run a business. We're excited that our three panelists will be able to help address some questions and hopefully give things for you to think about. With more than 3.3 million small businesses operating in the state, representing 99% of all Texas businesses and employing nearly half of all working Texans, it's clear that Texas small business owners and entrepreneurs make up the backbone of our great state's economy. We appreciate you joining us today and commend you for everything you do to keep our economy growing strong. We have a great panel planned for you today and hope you are able to take away pieces of information that ultimately assist in your pursuit of your entrepreneurial dreams. I want to thank our small business team, assistance team, Jarvis Brewer, Brian Roller, Sandra Sanchez, and David Menchaca Garcia, who is moderating this, for putting this together today. Finally, please don't hesitate to reach out to our office if there is anything we can do to assist you as you continue to do business in the Lone Star State. David, I send it back to you.
Thank you, Larry, for your remarks, and thank you for being here as well. As we said, we're part of the small business team, and it's our job to help and assist small and medium team Texas businesses through advocacy, services, support, and education. I just want to say that we're grateful to have our panelists along with our audience here today as well. And we want to have a very insightful conversation where our panelists can provide answers to some frequently asked questions. Today, we will have 3 panelists who are going to provide useful information on how businesses can optimize their cash flow. First, I would like to introduce and welcome Mr. Troy Boyster, the Vice President for the Guardian Chamber. How are you doing today, Troy?
I'm excellent. Thank you.
Fantastic. Why don't you tell us a little bit about your organization and what you do?
So I'm one of the VPs. I have the whole state of Texas. I'm blessed to have that state. So we meet the business owner where they're at in a couple different areas. It's cash flow, it's business valuation, and EIN corporate credit. So it's about education first, serving the business owner where they are, and getting them to the next level of success.
Great. Thank you for being here, Troy. In addition to Mr. Boyster, we also have Ms. Olga Bashkatova, who is the founder of Next Stage Advisory, LLC. Good afternoon, Olga.
Hi, thank you so much for having me here. I'm really excited to talk about optimizing cash flow. So my name is Olga Bashkatova. My company is Next Stage Advisory. What we do is we provide full accounting services for HVAC companies. And so we handle everything from, regular accounting, payroll, vendor payments, customer billing, and provide really great insights at the end of the month that business owners can really use to grow their businesses. And then hopefully get them to, if they're planning on selling their company, get them to a really high value exit.
All right, fantastic. Thank you so much for the introduction, Olga. And to round out our group here today, we have Mr. Gerald McAdoo. He's the Director for Snapshot Business Services. How's your day going, Mr. McAdoo? Oh, you're on mute.
I said going very well. I'm enjoying the weather here. Being originally from Michigan, but living here in Texas for the past 31 years. It's been fantastic. I'm educated as an electrical engineer. I've been an investment consultant or money manager for small pensions and endowments, and then later for high net worth individuals and families for a decade and a half. Various entrepreneurial endeavors, some successful and some not so much. I'm a Christian, a husband, 26 years this month, most of them good, as they say. I have 3 kids, one living independently, one a sophomore in college, and one a sophomore in high school. But for today, as the owner, CEO, executive team members, that we understand how important it is to enhance profitability, reduce expenses, and to reduce those who are attending their tax burden. We help small and mid-sized business owners capture the local, state, and federal incentives that they qualify for. My passion and my energy goes towards working alongside Main Street business owners to improve cash flow. So over the past 24 years, our core team and partnerships have identified over 37 billion in incentives, most importantly with 0 IRS disallowances. But what I'm excited about is that there's 2.3 trillion available for many of you hearing this webinar that you qualify for. Again, Gerald McAdoo with Snapshot Business Services. Thanks for having me. It is truly an honor to be here.
No, thank you so much as well, Gerald. I'm going to be honest with you. Yeah, the weather is feeling really, really nice, and this is someone who's lived in Texas most of his life. So, nonetheless, let's get started with this panel that we have today and answer some questions that are related to cash flow management and the issues that small businesses can face surrounding them. We're gonna begin today with Mr. Royster. Now, Troy, it seems like a lot of businesses that are just starting up or have even been in business for a while have some issues with their financial revenue. What are some of the main reasons that you see that small businesses struggle with managing their cash flow?
Great question, and thank you. So when I mentioned earlier, meeting the business where they're at, it seems like no matter where you go, there's always a topic of cash flow if it's not the main topic. So some of these reasons, let's kind of dig into those. It's irregular income streams, right? That could be for a myriad of reasons. Inconsistent revenue, periods of high income, followed by lean months. Some businesses are seasonal, some are not. There's a lady that knows about HVAC business here, but unfortunately in Texas, that keeps the air conditioner on pretty good. So keep in mind, if your business is seasonal, you got other things that you have to worry about: freelance operations, project-based work. That's another thing you got to worry about. Number two, late customer payments. Depending on what industry you're in, especially the trades, it's 30, 60, 90. I'm hearing 120 days now for some of this cash to get in the door. Outstanding invoices is another thing. We're a small business. We deal with that a lot. That creates gaps in revenue, right? So you have to plan for that. How do you plan for that? You got to have a base, you got to have a system, you got to have a platform to go to get there. Insufficient cash reserves. If you don't know how much money you have coming in the door and where it's going, you have to know that. So small businesses operate within they have such a minimal cushion to operate in. Unexpected expenses, temporary revenue drops quickly create a financial strain. Many entrepreneurs invest most of their initial capital into starting and running the business, leaving very, very, very little room for the financial uncertainties that come. And guess what? If you're the small business owner, you know that they are around the corner knocking on your door. High operating costs, number four. Small businesses have a disproportionate amount of high fixed costs relative to the revenue. Expenses like rent, utilities, equipment, insurance, salaries. Everybody knows about that one. Next one is poor financial planning and tracking. So you got to have a person, system, process, software in place to do this, and it's got to be monitored. You got to consistently do that, because if you don't understand your cash flow in the business, depending on where you get your numbers from, it could be SBA, it could be from Google, it could be from the other sources, but there's way too many businesses that close. And the number one reason is usually cash flow. Some other things that we could look into are limited access to credit, and I'll kind of get into that a little bit later. EIN corporate credit and the difference from personal credit to business credit. There's some other things like rapid growth challenges, unexpected expenses, equipment repairs, God forbid, legal fees that come up. We're in the small business world, that happens, and we're in a sue happy world too. So people like to use that at their leisure, if you will. Insufficient pricing strategies. Small businesses struggle to set up prices that adequately cover their cost and provide sufficient profit margins. You got to know your profit margins. You got to know where you operate within that range. Underpricing leads to shortfalls. What about overpricing? Do you overprice yourself out of the market? Then there's inventory management issues and all that goes on with that. There's a whole host of things that go there. So that's just some of the things that businesses struggle with. I know there's many more, but that'll highlight some of them. And, if there's more questions, we can answer those at a later point as well.
All right, fantastic. I just want to interject real quick and remind all of our attendees that you can email us for any kind of questions you may have for us or participants. The email would be smallbusinesses, all completely spelled out, at gov, being Victor, .texas.gov. Now, Troy, how often should I generate a cash flow statement and review it? are there any online tools that can help people, or is there a process for identifying potential cash flow issues early on?
So if I'm a business owner, I would have to do it as often as I could, but we recommend every month, obviously, because there's a lot going on from a business from beginning of one month to the beginning of the next month. So the monthly review of the benefit, it provides a timely snapshot of your business financial health, allows you to quickly identify potential cash flow issues before they become critical, because you have to know, again, what that cash flow is coming in and where it's going and where it's going to. You helps you proactive financial decisions based on your recent data, and that data always has to be up to date. Enables you to track seasonal variations and emerging financial trends. Recommended timing, again, is probably the first or second week after each month. Coordinate that with your monthly financial reporting. Use this time to complete actual cash flows against your project budgets. You can do that with, the individuals here. You can do that with the software. You can do that with us. There's obviously opportunity to get this done. If you have a platform to go to, a dashboard, I highly recommend that, because that's where all the data is kept, and it's correct and efficient that way. Additional periodic reviews, quarterly. I would do it quarterly as well. You conduct a more comprehensive analysis looking into the broader trends, how it appears next to your goal, your business goal for that year, maybe the 18-month, maybe the 3 or 5 year plan as well. And then annually, perform this annually to understand your financial performance, where it sits against your dreams. So key elements to examine: cash flow from sales and other revenues, cash flow outflows like expenses, payroll, and loan payments, then your net cash position, potential cash flow gaps and surpluses, tools and resources. That's one of the questions you ask, obviously, is there's a myriad of places to go and people to see, but go to a trusted advisor, and that trusted advisor has to have a platform and dashboard to use. It's just all about tracking and the accuracy of that tracking. Consider the software that can generate cash flow statements automatically. Try to make it simple as you can for the business owner, because guess what? You've strapped the world on your shoulders, and you need to make it simple so you can understand it. Yeah, that's some of my key points there. So monthly review and having it tracked on a dashboard with software.
Yeah, no, thank you. Thank you for your response, Trey. I was also thinking, going back into your first question and your response to it, I have a bit of an additional question to add to that. What are some misconceptions that business owners, coaches, CPAs, and bankers have when it comes to building business credit?
So great question. So here's the education gap that we as a company, Guardian Chamber, deals with. There's 3 different kinds of basic credit that we deal with. There's personal credit, business credit, EIN, corporate credit. The business owner starts their business, they personally guarantee, they bootstrap everything they do, right? So what's that mean? Your FICO score goes down, your business credit score goes down, your EIN credit score, nobody's even taught you about yet. So you don't even know that exists. By the way, business credit is from 0 to 100. If I was to ask 100 business owners, 97 of them wouldn't know their business credit score. So how do I get a business from visible to viable to fundable, right? So remember, that business credit score is from 0 to 100. And we're going to meet that business owner where they're at with education first. That means, so going back to the CPAs, the bankers, the business coaches, all these folks out there that have a little knowledge of that, of the business credit, EIN, corporate credit. The problem is nobody knows how to get you there. We have a platform in place that does that. It takes, depending on what your business credit score is. And by the way, when I pulled up most business credit scores, they're in the 20s. That's like a 350, 400 FICO score. So that's not very good. And the credit limits are anywhere from $1,000 to maybe $5,000 or $7,000. And you can't run a business very long for that kind of, let's just say, opportunity. So why do you want EIN corporate credit? If we can make your money worth more at the end of the day, it obviously brings up your revenue, your margins, your profit margins, and everything like that. So When you get EIN corporate credit, that happens at tier 4 at 80 plus. So remember, business credit is from 0 to 100. And if we can remove the bulk of the business expense off that FICO score and put it on the EIN number where it's supposed to be, guess what? Your money comes cheaper at better rates and better terms. Instead of paying 17, 18% for a loan, depending on where you're at in the market and what market you're in, it's 5 to 8 basis points conservatively lower than what the market rate is. So imagine that at helping the cash flow at the end of the day. So we have a lot to talk about. Again, it's getting the 93% of what a business owner spends their money on is not seen by the business credit bureaus. There's Business Equifax, Business Experian, and most people know D&B, Dun & Bradstreet. So if they're not seeing what you're doing, business owners already are paying their expenses. How do they know how to get you credit or a higher business credit score? They don't. So we as a company, we have a platform that you go to. We have a whole credit coaching team that gets you viable through those business credit bureaus. So guess what? The business credit bureaus don't care how many years you've been in business, what your profit and loss is, what your revenue. They want to know if you can open an account, utilize it, and pay it on time. You start small, you start net 15, net 20. Then you go up to the next tier. You prove yourself, you prove your ability to open an account, utilize and pay on time. And then you just work your way up the tiers to the bigger tiers going up. And once it gets to 80, we can't get rid of all the personal guarantee. And I need to make this clear. If somebody says you can take away all the personal guarantee, you can't. You can get rid of most of it off that FICO score and put it on the EIN. By the way, just by default, we're not personal credit repair people, but when you start relieving the burden of the business expense off that FICO, that Social Security number, it automatically goes up. And it's hard to fund a business with debt to income ratios, credit limits. It's hard to fund a household and to fund a business. It's difficult because the business owner is strapped, right? They're doing everything that they can to make that business successful. But if you can get money cheaper, and we make it worth more at better rates and terms, it makes a difference at the end of the day for the business owner. And that's what we do. I would suggest starting with a business credit score, see where you're at, see where the playing field sees you at. Yeah.
All right. Thank you again for all your insight, Troy.
You're welcome.
Yeah. So just once again to remind all of our attendees, you can email us more questions that you may have on anything at small business being singular, at gov.texas.gov. Now, sometimes a business can be surprised with financial issues and potentially a big purchase that will need to be brought in order to keep the business moving. And funny enough, that actually interjects me to the next point and my question for Olga Bashkirtova. Now, Olga, I wanted to ask you, how can businesses avoid surprises when it comes to running out of cash or planning for big expenses, like, let's say, new equipment, office expansion, or maybe even hiring new people?
Yep. Thank you. So obviously those are common issues that all businesses have. And assuming that the business is profitable, right? So it is generating profits that sustain the business. The issue with kind of being surprised, right? Owners usually know how much revenue they're generating, what their expenses usually are if they've been in business for a while. So usually they're getting surprised if they're not collecting cash from their customers, right? Or they're spending more than usual. And that could be because maybe there's some sort of catastrophe, maybe there's a lawsuit, maybe there's some sort of damage to the building, or to the store, or maybe, just like we just had crazy inflation and all the prices rose, right? Or maybe there's a pandemic, right? So these unexpected events, or it can be growth, right? Or there are sometimes seasonal issues. So, somebody, and when I say growth, you can be investing in growth, right? And that takes a lot of marketing dollars. Maybe you're opening another location. And so number one is you have to control spend, right? So we'll talk about, one of the other questions that we have deals with, how do we get the money in the door from our customers? So right now we're gonna focus on the spend portion of it. So when we're talking about controlling spend, we really have to, aside from having a budget, which is a big deal, right? And most companies do not have a budget, but now 2025 is coming up. This is a really great time to work on the budget for your company. And then you use that budget to hold yourself accountable every single month to make sure you're not overspending, because that's what a budget is. It's your forecast for how much you're going to spend next year to achieve your revenue goals for next year. And so you have to make sure that you're not varying too much from that. And if you are, you have to understand why. And so you also need to have an authorization matrix. The more people you add to your team, you're giving them some sort of, to managers, some sort of spending authorization. Maybe they have credit cards, maybe they have access to bank accounts. They might be able to sign contracts on your behalf and lock you into liabilities. You have to be very clear with your team what they're allowed to spend on, how much they're allowed to spend, and what that process is of who has to approve the spend. And maybe it's you, right? Maybe, you want to make sure that anything over $1,000 goes through you. You, at some point, as you get to be a large company, you might want to put in a purchase order system where every single contract and every single vendor payment has to have a purchase order that's approved by the accounting team first, which is also approved by the managers, so that kind of just creates this extra process of control over your spending. And obviously, you have to have contracts for every single vendor. That is the number one way to control spend, right? Because then you have to review the contracts. You're also looking at the terms, of your vendor payments and like obligations and all that. Also, when it comes to your expenses, you need to be negotiating installment payments as much as you can. Usually, it costs a lot less to pay a little bit of interest to do installment payments for like a large purchase versus borrowing the money from another source. Or if you're going to, one of the other things we're going to discuss, if you're going to borrow against your receivables from customers, that is also more expensive than usually what your vendors will charge for you to delay your payments to them. When it comes to taxes, that shouldn't be a surprise for anyone, right? So usually it's a once a year. If we're not talking about sales taxes, that's a once a year payment. We should be putting money away every single month. Now, for some of us, we're making so much money that we have to do quarterly prepayments. Some people have to do, some companies have to do maybe even monthly prepayments, depending on how much tax liability they have. But at the very least, even if you don't have to do prepayments, you should be putting the money away into a separate account, because if you can't touch it, you're probably not going to spend it, right? Just put it away, as it's a good practice, so that you can make those prepayments quarterly or just make that once a year payment. And that's for both federal income taxes and for the Texas franchise taxes. And for any, if you're in any other states, their state taxes as well. And obviously you have to take into account your growth. So that if you have more revenue in the coming year than the last one, you have to plan for more tax payments. And of course, this also leads me to what Troy had mentioned, which is cash forecasting. So just like you're supposed to have a budget to control your spend, the cash forecast, it focuses just on cash. And what it's doing is it's basically taking you're planning how is your cash balance going to change from month to month, so that you can predict your cash balance in the future. And what that takes is you have to forecast your revenues, but not just revenues, but when you actually collect them. So in your industry, it may take your customers 60 days to give you the payments, right? It may take, in some industries like advertising, it's 120 days for you to collect payment from the big ad agencies. And so, you're doing that, you're forecasting expenses, you're tying them into revenues. And that's really important, because if you have marketing spend and you're planning for that, you have to also kind of say, okay, well, I'm going to spend a lot of money in January. I'm going to start seeing my revenue pick up in February, and it's going to last for like 3 months, and I'm going to have this uptick in my revenue. And obviously that's based on historical information and kind of working with your marketing team. And so you're planning both the revenues and the expenses. You're tying them together. You're taking into account seasonality. Again, you're focusing on the cash. When is the cash coming in from these things? When is the cash going out? And that is the cash forecast. And so it's really important to do this. And again, most companies do not do this, but it's really important to do this, because then you can start planning. Because information lets you have preparation, right? And I always say that to be successful in life, you need preparation and a little bit of luck. And so, but preparation is key. And that's what this, the cash forecast, that's what it's getting to us. And so when it's time for large purchases or for growth or for acquisitions, if we have a cash forecast, we can plan for how much money we need, how much money we will have, and then how much money we need and how we can save it over time or how we can borrow it from other sources in order to make these purchases or acquisitions. That's it.
All right. Thank you, Olga. Adding on to that, what are some steps that owners can take to identify and fix areas of their businesses that are, either losing money and ensure that they are investing their cash in the goods or services that will make them money?
Yes. And so this is exactly what accountants do, right? And this is what accountants should be doing. How about that? So financial analysis is really important. There's no way for you to know, without just kind of guessing, how are different services and products in my company doing. The only way for anyone to really know that is by doing the hard work of actually analyzing their numbers. And so that means that you're not only splitting your revenues by the different services and products that you offer. So number one is you have to identify all the different services and products, right? Then you have to start tracking that in your invoices. So the invoices that you send to customers, most of the companies that I come across, they have one revenue line in their financials, just one. It doesn't matter if they have 10 different services. This is especially true for service companies, not so much for product companies. But everything just goes into this one line. If you have 5 different services, they will all have their own gross profit margins, right? They all have their own profitability depending on what kind of service or product it is. You need to be tracking that separately. You can't just have everything kind of like all together in one, because then there's no insight that you can have about your business. So we need to be tracking the revenues separately, which happens on your invoices. And then we need to start tracking the time of your people. So there are a lot of time tracking tools. And of course, you can also kind of at the end of the month, just instead of tracking their time, you can kind of guesstimate where they spent their time. But the best way, and this is what surprises most people when they start tracking time spent on customers and projects, they're usually surprised not only by finding a lot of inefficiencies and like ways that they can improve the process and lower their costs, but they get surprised by which clients or services take up the most time. And so all of a sudden they realize, oh my gosh, I thought this was profitable. This is not profitable at all. I need to step away from these sort of clients, or I need to stop providing the service, or there's a lot of, money left on the table that we're not charging for, the price is not high enough. And so it's really important to start doing that, right? And figuring out what these costs are by service, by product. And so that's really how you figure out where you need to put more money or where you need to, take it out. It also, kind of, when you see that something is costing you too much, but you can't raise the price. So you either need to find efficiencies, right? Or you need to find maybe some sort of cost savings. Can you hire cheaper people? Can you outsource something, right? Can you buy in bulk and like lower costs if it's about materials? But again, you can't even think about these sort of questions if you don't have the information about where the issue is.
No, completely agree with that and understand that. Thank you, Olga. So when it comes to discussing the worry of losing money, what can small and medium business owners do to ensure they don't run out of cash, especially like when it comes to situations like waiting for payments from customers?
That's right. So this, as I mentioned in the first question, the other side kind of making sure that you know how to plan for things in the future is making sure the money's coming in. And so people are usually surprised when all of a sudden they didn't get as much money as they were supposed to. And so there are a lot of, and I know also Troy had mentioned it as well, it's about managing customers, right? And the money that's coming in. So there are a lot of ways. It starts with making sure that you're billing people on time. It starts with making sure that your contracts with customers, and you should have contracts. If you're selling something online, you should have very clear terms of service on your website that covers late payments, and what the payment terms are in general, and your, any interest rate charges that you would be making. And so so that's where we start, right? And then if we're not collecting payment right away, which is highly suggested, right? So if you have recurring services, for example, that you provide every month, and whether it's the same amount every month or not, if it's recurring and you have a relationship with your customer, you really should be setting up some sort of auto charge, if possible, through software, so that you don't have to worry. Their invoice goes out, you give them maybe 30 days to pay, and then on the 30th day, it charges, right? So then the money's coming in, and the only time you get a notification if it bounces. So that's a really great way to make sure that money's coming in. You can also work on, and depending on the industry, on getting deposits in, right? Or having your clients prepay for your services. You can also work on offering incentives. So in some industries, that's very prevalent. So maybe you have 60-day payment terms standard with your clients, but you can say, okay, if you pay within 30, we'll give you 1% off. Other options that are out there are invoice factoring. So invoice factoring is when you work with an outside provider where they're basically forwarding you, they're kind of like fronting you the money for about 80% of your receivables every single month. And they charge 1 to 5% of the invoice total. So it's not, there are obviously offering somebody 1% to pay faster. It's usually cheaper than going with invoice factoring, but then you're managing that, right? There's no predictability there. It's something you offer and they can take or not take. It's also really important to have a policy internally for how you handle bad debt. And so are you using a debt collector, or when does something, when do you consider a client to be kind of like a lost relationship where you would actually send them to a debt collector? So that's really important for you to have figured out on your end. And then just really quickly on the vendor terms, that's also really important for timing of cash flows. You want to be pushing back on the liabilities that you're paying out as much as possible. So again, when you're signing contracts with vendors, just make sure that those terms, like they all want due upon receipt. They all want to send you bills like that. Don't agree to that, right? Negotiate. I always say at least 30 days, right? Unless it's a contractor that's an individual, then they usually want 15 days. But you want to buy yourself time to pay out liabilities, but get your customers to pay you as quickly as possible. That's it. Thank you.
All right. Thank you so much again, Olga, for all your knowledge. Just want to give once again a quick reminder that if you have any questions or have any kind of thing that you would like to discuss with us or any of the participants, you can always email it to us at our email. Our email, once again, is small. That is SMALL, business, BUSINESS, @gov.texas.gov. Now,
sorry, and I also, if I can, I forgot to mention that if somebody wants a cash forecasting template, they can just email me. I think you're going to have my email there
yes.
later on, so they can just email me and I can send them an Excel template.
All right, fantastic. Oh, thank you. Definitely. So when it comes to financing your businesses, one of the major questions that we get all the time are on incentives and what can be offered. So that leads me to a question for you, Gerald. What are some of the most underutilized tax credits and incentives?
Oh, great question. Thank you. First of all, start off, Troy, Olga, you guys put together a great panel and share some great information. So much that sometimes I know this information could be overwhelming to business owners, emphasizing why owners should engage professionals to do this. I'm going to take a little different perspective to improving cash flow. A question I believe business owners should be asking themselves is, what would it take for you to net $100,000, right? What would it take to move my business $100,000 net? So let's say if your business has a profit margin of 10%, means you need to add $1 million to your top line in order to make $100,000 net. So, who would you need to hire? How long would you need to train them? What resources, physical and intangible, are needed? How long would it take? What risk, plural, do you need to take on? And then ultimately, what's the return on investment? And as important, what's the return on your time? So now getting directly to your question, all types of businesses qualify for these various tax credits and incentives. If your business is domiciled in the United States, or you have an international business with operations here, then you can qualify. So, manufacturing, distribution, engineering, software, services businesses like HVAC businesses, restaurants, medical, professional services businesses, these incentives are industry agnostic. Now, there are over 100 incentives that we screen and capture for clients. Let me put them in two general categories. The average business, they have two assets that they're mainly looking at. First is their physical facilities, right? These are their locations, their buildings, where they operate out of, and then their asset, their human asset, which is their employees. Now, both of these different assets generate tax incentives, and I'll cover a couple of them just at a really high level. Not going to dive deep. We don't have time to go for you to know everything about these different tax incentives, but just starting with the employees. So in your normal course of business, you're hiring employees due to turnover, new positions due to growth. There's the WOTC, or Workers' Opportunity Tax Credits. These are hiring tax incentive credits. They've been around for several decades. 22% of employees will qualify for them.
Mhm.
What this means for you as a business owner is every tax credit, the average tax credit is about $2,400 on up to $9,600. Now, again, this is a tax credit, not a deduction. This is a dollar for dollar offset against your federal tax liability. There's $1 billion generated in this particular tax credit every year. And that's 99% of businesses are still not taking advantage of this. Now, this is for your future hires. Now, $1 billion sounds like a big number, but $1 billion divided by just the average tax credit is $2,400. That means it's applied to 420,000 employees. That's not very much. And again, 99% of businesses are not taking advantage of this. Now, that's future employees. You can actually go back in time, looking at that human element again, and look at tax over the last 3 years and get tax credits on everyone. Not just those that work for you now, but everyone that has worked for you over the past 3 years. And then that property, that commercial property, that real property, you can actually go back to 20 years. So every expenditure you've had, purchasing the building, those renovations that you've done, things like that, they're tax incentives for that. And they're actually different tax incentives each year. 92%, actually 92.3%, if you believe the IRS, and our experience does bear this out, 92% of owners have not utilized this IRS approved tax saving strategy. What does that mean to business owners? Generally, for every $1 million of cost, again, this has nothing to do with market value of the property, but for every $1 million of cost to purchase, build, or renovate the building, the benefit to the owner is about $150,000. They're location-based incentives. So if your business has a presence in one or more of the current 280 plus counties across the country, there's another $2,400 in a tax credit per employee. So just to cast a wide net, I could go on forever with some of these things. Just to cast a wide net, if you own or use commercial property, or, and these are not and statements, or you hire one or more employee a year, either full or part-time, or you have employees that are manufacturing employees, or they're doing anything that's kind of technical in nature, you potentially qualify for some of these tax incentives. And again, we're not creating cash out of thin air, but rather uncovering what is available in your business that you may not see and they're sharing it with you. One other thing I would say is I would also include opportunities to enhance profit through expense reduction. Our research shows that over 75% of business owners are not minimizing service expenses. Now, you're going to say, Gerald, we manage our costs. It's been alluded to on the call today. I'm sure you do. However, what I'm referring to are independent third-party audits. So without changing vendors, and not your broker who's presenting you with current market quotes, the right audits are profit-enhancing tools that can make this just a quick an easy win for you. So this summary, don't miss this. If 9,200 out of every 10,000 property owners haven't had a proper cost segregation is the technical term for property incentives, and a high percentage are not taking advantage of employee incentives, the hiring tax incentive alone, less than 1% are using it effectively. And if 75% are not taking advantage of these profit boosters I mentioned, what does this suggest to you and the impact that you could have for your company?
No, I agree. Thank you.
Because I will go on.
No, I was gonna say just thank you, Gerald, honestly. So I do actually have another question for you. Now that we know what are the most underutilized tax credits and incentives, why aren't businesses taking advantage of all the incentives?
Oh, great question. Short answer, they don't know they exist. I will tell you since PPP, the Paycheck Protection Program, and ERC, the Employee Retention Tax Credit, it's been a little easier since I don't have to spend as much time convincing people that these incentives are real. In many cases now, they've actually grown dependent on some of them, but neither PPP nor ERC were renewed. So what else is available? So yes, they don't know they exist. They don't know how to take advantage of them. They think they're too small of a company or requires too much time. They believe they need to do it themselves and have to become a subject matter expert for some of these things. So how can they capture them? I mean, some of the options are, number one, you could become the expert. Perhaps you add this to the list of things to do to become an expert. Also, if you decide to do that, be prepared to relearn them because the laws, although these are permanent tax credits, the guidance changes from year to year and even within the year. Second, you could, perhaps you have an amazing CPA. Most likely that CPA has a team like us doing this for them. But for that property incentive, for instance, there are multiple methods to do this, but the IRS tends to frown on averages and estimates. So we use an engineering-based approach to that. It's the only method we employ. And it's part of the reason that maybe the CPA hasn't done or didn't get the full benefit for you. So unless your CPA also employs engineers, I think that's a great question to ask your CPA. Do you have engineers on staff? If the answer is no, then it's more likely you haven't had this done or didn't get the full benefit. So get a second opinion on that.
Right.
Three, perhaps you have a team of vendors or staff that can execute this in perfect form for just some of the incentives I've mentioned so far. I will say it can be very difficult to manage and provide the appropriate level of oversight, compliance, integrity, support, service, and so on. So how much time are you willing to put aside to coordinate and, direct another team, and business effort, right? You're in business to make money and run your business, right?
Mm-hmm.
So it can be difficult. I would suggest not going it alone, but rather finding someone who can do this for you, preferably with a system and a platform to do the heavy lifting. A tax management system is the most efficient option with the biggest rewards. So that's, a person or a team, third party, that helps you accomplish this. I will say this, instead of in fear, I'm talking a lot of kind of fear right now, but let us show you. So, for your time and attention, for staying on till the end, let me provide something of immediate value. I know we've alluded to providing our contact information at the end. If you send me an email and reference the Governor's Small Business Webinar, I'll personally provide a specialized tax incentive calculator for you. So it'll take less than 2 minutes, answering a handful of questions that you already know the answers to, but it will list the top 2 or 3 incentives that your business qualifies for and an estimated dollar benefit. That's no cost, no obligation. You can DIY it from there if you like. You can talk to an expert or you can engage us if you like. We call this calculator 6 strategies in 60 seconds.
All right. All right. No worries. Thank you so much, Gerald. I'm just trying to think, as if I was a small or medium business owner, with all the information that you have provided today, I have to ask, like, where can I learn more about this, and what are some tips for filing out the paperwork?
Oh, fantastic. And thanks for asking. Yes, so certainly, as I was alluding to, or they can contact me directly. They can go to our website, Snapshot Business Services. There's information there that's available. For those that become our clients, we do the heavy lifting for them. So they don't have to become the expert. We have a team of experts to do that for them, and we do it on our dime. Yeah, our motto, our way of operating business is we essentially use our money to make them more profitable. So we do that every day. We succeed together, and then we share a little bit in the benefit when we're successful. We will engage with their tax professional, their CPA, or their team. Again, we do the heavy lifting for them. We really work hand in glove with them. So, for instance, we would do the engineering studies and report and the documentation that is needed. And then we work with the CPA so they can file the appropriate form, because we're not tax preparers. So they can apply the appropriate form to ultimately get these lucrative benefits for the clients. So we can work with them and their team for these things.
All right. Thank you, Gerald, for your time and response. And I also want to just thank you all for everyone for your questions, and thank you to our panelists for being able to provide some great answers. Unfortunately, we weren't able to get to some of the Q&A just due to time allocation. However, we will still go ahead and email you back any kind of answers that we may potentially have for you towards your questions. I just want to also take a little bit of time and ask if there are any last comments from the panelists today about important things that small business owners should take away from today's event.
I can just add that I think what was said before is that all of this is very overwhelming, and every time that I do a webinar or a panel, and I'm sending out all this information, I'm like, oh, people are just like, their eyes must be glazing over. Thank God I can't see anybody's faces right now. But it's just so important to just, yes, it's a lot of information, but it can all be taken one step at a time. And like, yes, you can outsource some of this. Now, not all people that you outsource all these different aspects of the business to are made equal, and that's unfortunate, right? But hopefully you guys find the right accountants, the right tax people, the right credit people. And obviously everybody on this panel, super qualified. I love these guys. And just take everything one step at a time, take deep breaths, right? It doesn't all get done. It doesn't get done in one day. But with small steps, you'll get there eventually.
I would echo a lot of what Olga is saying too. There's one thing that I've learned over time is it's hard to do it alone. I've learned that business really is a team sport. So treat it as a team and find a good team of professionals around you.
I would agree. So I echoed both of theirs, and remember, it's education. Take as much as you can in, and you got two great advisors down there. So yeah.
I agree too. The reason why we chose to focus on optimizing your business's cash flow as a panel topic is because we find that it's important to understand your cash budget to make strategic decisions and improve operations. Learning how to effectively manage your cash flow is crucial to navigating financial challenges and pursuing opportunities that allow for business growth. And whether you're a startup or an established small business, we do hope that this webinar provided some relevant information that you may utilize in your business. We plan our webinars and our in-person events to share resources for small businesses and entrepreneurs in Texas. Every year we host 15 in-person Governors Small Business Summits. As you can see in the PowerPoint presentation right there is a list of the locations that we were in just this year, with last week being our final one for the year in Kaufman, Texas. We go across the state providing, events in 15 different locations every year, and we're currently working on our schedule for our 2025 summits, but we highly encourage you to stay connected to our office and attend one of our events. Besides just being a good information hub to learn more, it is a great networking opportunity for small businesses. And we also have state agencies and nonprofit organizations tabling who offer resources and help. As you can see on the next screen is going to be our Governor's Small Business Assistance Team. It comprises of 4, and yeah, there's only 4 of us, members who assist small and medium Texas businesses through advocacy, entrepreneurial support, education, and technical assistance. We do this through a variety of services, including assistance with permitting, licensing, and regulatory compliance, small business resource referrals, and informational small business webinars and events. On the screen, you can see our contact information in case you may have any further questions that we may assist with, along with any helpful links for additional resources from the Office of the Governor. If we can go on to the next slide, you'll find contact information from, you'll find some additional information. Once again, you can find our website over there where you can see more about what we can do for small businesses. It's gov.texas.gov/small businesses. Right under it, you'll see our events calendar. That's where we're going to be posting our new 2025 summit, along with any webinars that we may have. And the Governor Small Business Resource Portal is a fantastic portal that you can use in order to get all the information that you may need from us on the state level for your business. Now, on to the next slide, you can find contact information from each of our panelists, along with links to their company's webpage, where you can learn more about their businesses. Along with this webinar, one of our panelists, Troy, has something that he wished that he can offer. If you want to take it away, Troy.
So that EIN corporate credit report, I'll offer that free to you. Just put a subject line in, put the Texas Governor Summit. It's a great starting point to a visual of how the Business Credit Bureaus see you. Because remember, they don't see 93% of what you do. So let's take a look at that so we can get you viable, visible, and fundable, get you money and make it worth more at the end of the day.
All right. Thank you so much for your assistance with all this, Troy. And once again, I just want to say thank you so much to our panelists, and that this will wrap up the small business webinar series, Optimizing Your Cash Flow. Once again, I'd like to thank our panelists, Gerald, Olga, and Troy, our Director of Business and Community Development, Larry McManus, and all of you for attending this summit and joining us here today. I'd also like to thank my team, that includes Jarvis, Sandra, and Brian, for helping make this webinar possible. Thank you all for coming, and we do hope to see you guys soon in either another webinar or in one of our summits. Thank you.
Thank you.
Thank you.